I think we could see next week silver be very explosive to the upside. We could see a lot of volatility as well. And I expect the premiums to go higher for silver, which is half of, I guess, 5. But yeah, $100, I don't think is out of the question. Back in 1979, I think silver was at $16 in November, and by even end of November, and by January 1980, it got up to 50, so it like tripled. So we could very easily double. And if we double, we're at 100. I'm not saying silver, I don't like to say, oh, silver will never go below 50 again, because I think it still could. You never know in the precious metals market.
Marioinnecco highlights the kind of silver setup that only appears at significant turning points. Momentum is tightening, volatility is rising, and the underlying tone in the physical market is shifting, often signaling explosive upside. He notes that premiums are already creeping higher, reflecting real-world demand pressures rather than speculative noise. If silver mirrors its historical behavior, like the rapid surge from $16 to $50 between late 1979 and early 1980, the metal could easily double from current levels, putting the $100 mark well within reach. This isn't a forecast of a straight-line move, and Mario acknowledges that silver can still dip below key levels during stress. But the broader trajectory is unmistakably upward. Today's environment combines supply tightness, investor positioning, and macro catalysts in a way that can ignite fast, outsized moves. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
I think basically physical demand for silver is overwhelming the paper market. And 3.5 years ago, a little more, we had the silver squeeze movement, and that didn't really go anywhere. We got to 30, and then there was a lid there, mainly because the big sovereign buyers of physical silver that we're seeing now, and also big investors, they weren't interested in silver. They might have been buying ETFs, but they weren't interested in physical. But now everything's changed, and I think that's why silver is picking up. And also silver has still to catch up with gold, because don't forget, gold in 1980 got to just below 900, and now we are here at I think 4,200 as we speak. And silver got to like around 50 in 1980, and it's just moving above 50 now. So I think, since mid-October, there's been a correction, and a lot of people weren't too sure if silver was going to make it back up. But I think this is very significant that we made it back up, and we've made a new high. Yeah, gold is lagging, but I'm not concerned about that. I think if you look at the gold-silver ratio, it's breaking down, which is a good thing. Back in the 70s, and also in 2011, towards the end of the bull market, silver really caught up and went higher. And I'm not saying the bull market is near an end. Precious metals, I think, is far from over. But usually it's good to see silver leading the way. I mean, I remember back in from 05 to 08, even though I was a futures and options broker for government bonds, we had a client that traded a lot of silver, and so I was involved in that. And I could remember $5 days when silver was between $15 and $20. So I don't see why we shouldn't see $5 days again, especially now that we are above 50. And I mean, as we speak here, we're just trading at 56, the spot price. That's a new all-time high. And we're actually up, Elijah, $2.60, which is half of, I guess, 5. But $100, I don't think is out of the question. Back in 1979, I think silver was at $16 in November, and by even end of November, and by January 1980, it got up to 50, so it like tripled. So we could very easily double And if we double, we're at 100. I'm not sure they'll be able to get it back below 50 from 56. And the other thing as well, if you do a long-term chart of silver and you draw that teacup that's been forming since 1980, the top of the teacup is around 51.50. So not only we're getting like record monthly closes, we're getting a technical close above that lid, which is huge. And the thing is, back in October, we went above that level, that lid. We went to 54.50 or 60 or thereabouts, and then we breaked back down to below 46 very quickly. And technically, that's very bullish. You retest the breakout by going back below the breakout, and now we've gone back above. So I'm not saying silver, I don't like to say, oh, silver will never go below 50 again, because I think it still could. You never know in the precious metals market, but the likelihood is a lot smaller today.
Innecco explains that the character of the silver market has changed dramatically, with real physical demand finally overwhelming the paper-driven price structure. Unlike the silver squeeze years ago, when the movement stalled at $30, today's surge is being driven by sovereign buyers, major investors, and a shift toward physical delivery. Silver has also begun to close the long-standing gap with gold, reclaiming levels it hasn't seen since 1980, and even breaking to fresh highs above $56. The gold-silver ratio is rolling over, a classic sign that silver is beginning to lead. Mario points out that the long-term technical structure, including the massive teacup formation dating back to the early 1980s, is now breaking decisively. With momentum shifting sharply, the likelihood of silver dropping back under $50 grows smaller by the day. Let's get into the interview.
The most important aspect is that actually central banks like in the Middle East, like the Gulf Cooperation central banks, even Turkey, Russia, China, they're all starting to buy physical silver. And I've even heard that Dubai now, they want to they're creating a tokenized silver instrument. Basically, they want to make silver kind of money again, which is quite amazing. I don't know if you saw the other day, Dubai, they showed this silver bar. It was 1,971 kilos, so almost two tons. And they're really into silver. We saw that India is going to allow individuals and companies to use silver as collateral for money, for loans, excuse me. So up until 6 months ago, the reason people gave for silver underperforming gold was that, central banks only buy gold, they never buy silver. But that's completely changing, and I think that's huge. And I think the silver price, right now we are like in what one would call terra incognita, like we're in territory we don't know. It's never been there before. But I think there's such huge potential for silver now that central banks are getting involved. And unfortunately in the West, very few people are aware of this stuff. I mean, you and I are aware because we listen to you listen to me, I listen to other people in the gold and silver space, but the mainstream is like completely like not really aware of it yet. Maybe the fact that like Tucker Carlson has started his own precious metals dealer might help wake people up a little bit. He's got a big following. So that's the major thing. These countries outside the West, they're going back to silver. Even Korea, South Korea, the central bank there has started buying gold again, but also silver. So, and we also seen, Elijah, that the United States and China, they've put silver on their critical minerals list. So everyone wants to get silver before those two giants get a lot more. I think people should remain calm. I try to stay even keel. Even on the way up, back in the beginning of October, the market went crazy on the way up, especially gold. I try to stay calm and not too excited. And the same thing when it corrected. Same thing now. But for people who want to get involved in silver, I would say don't go in all at once. I don't, if you have a certain amount of dollars, don't go and buy all of it in silver. Maybe dollar cost average, and don't worry about the price, because if you do it regularly, you're going to get a period when the price is corrected down. So yeah, I think that's the best thing to do. But it's getting, I think we could see next week silver be very explosive to the upside. We could see a lot of volatility as well. And I expect the premiums to go higher for silver, because the dealers, when it's very volatile, they need to have a wider bid and offer spread to protect their profitability. So that's the only thing I would say right now.
Growing physical demand is reshaping the silver market, and Innecco highlights how dramatically the landscape has shifted. Central banks across the Middle East, Asia, and emerging economies are now accumulating silver, something the market had not seen for decades. Dubai is developing tokenized silver instruments. India is allowing citizens and companies to use physical silver as collateral, and several BRICS-aligned nations are openly accumulating metal for strategic monetary reasons. Even South Korea has joined this trend, adding both gold and silver to its reserves. Silver is quietly being remonetized outside the Western financial system. With supply tightness, explosive volatility, and premiums expanding, Mario suggests calm, steady accumulation rather than chasing every move. Dollar cost averaging remains the most disciplined approach as silver enters entirely new territory. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.